So what I'm going to tell you next is the story of financial success. Like when I mean success, I mean financial success. So I'm going to tell you the story. So do you know who is Warren Buffett partner of? Do you know the second partner of Warren Buffett? He is Charlie Munger, right? Do you know there was a third partner too? Ever heard about the story of the third partner of Warren Buffett? No? Okay, so today we will hear about him. My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life. Because it cannot happen without a commitment, and it is my commitment to make sure you get all the support that you need to walk and achieve that destination. So his name is Rick Guerin. He is the infamous partner of Warren Buffett and Charlie Munger, who was a financial failure. When I say financial failure, not that he went bankrupt, but I'll tell you what exactly happened. So the story as it goes is that Rick Guerin first teamed up with Charlie Munger, and then Charlie Munger introduced him to Warren Buffett. And this is during the early 60s when they started working together. And all three were doing their research into investments. But the thing is, and they were doing well. Do you know the portfolio that Rick Guerin had was giving, I think, 5 or 7% more. Warren Buffett's portfolio was at 27% growth. Rick Guerin was 33% growth in the period until the early 70s. For like good 10 years, his portfolio, Rick Guerin, was better at investing than Warren Buffett himself. But Warren Buffett always says that, and even Charlie Munger said, we were never in a hurry to become rich and wealthy because we always knew we were going to become one of the most wealthy people in the world because they had an inherent skill. They knew how to make, 15-20% returns or higher returns than the index over and over again. So they didn't want to deviate from it, and they didn't want to take any extra risk. Rick Guerin was in a hurry. He was impatient. He was smart, don't get me wrong. You can't become a partner of Warren Buffett if you're not smart. But this guy was smart but impatient. So he had the head but not the heart. He had the smartness but he did not have the heart to wait. So came the crash of 1972-73, where in India had not even started the stock exchange, but in the foreign markets, 70s ka crash was a big crash. And in the crash, I think the market went down as much as 70%. And because of that, he was forced to sell his worth of the shares of Berkshire Hathaway at $40 per share to Warren Buffett. And here's a news article says that the same Berkshire shares that Guerin sold in 70s were worth more than $218,000 per share. $40 became $218,000 per share. Because of the impatience and the dangerous dance with leverage, he was forced to leave more than 5,45,000% worth of potential gains over a 4-decade period. Can you believe that? Why? Because he was greedy. Even working with the smartest people in the world when it came to money, his greed overtook it. Isn't it like a heartbreaking story that you make it all the way to the top, but you can't stay there for very long? There was a very funny story I shared on similar lines It was about Warren Buffett. Not Warren Buffett, sorry. What's this guy? Donald Trump. And it was all about like bullshit can get you there, but it won't keep you there for very long. You can get to the top, but you won't stay there for very long if you don't have very strong morals and principles. You might fool the people for a short period of time, but they won't have you at the top for very long once they've seen your worth. The stock market is an even better mechanism because it sees through you the way you manage your money. So it judges you on how you manage money, not how you talk and how you walk and what you say. Simply what you do is how it judges you. So the money mechanism system is the strongest way, is the easiest way to really see how you operate. And just want to know, did you find this story kind of heartbreaking? Like what he could have been and where he is. His worth is somewhere, I think 45 million or something recently, where he could have been a billionaire, like 45-50 million versus over 1,000 million, which is what a billionaire is. So when I heard this story, I was like, what a waste of potential. What a waste of potential. So what we can learn out of it is just stick with the principles, stick with the right investment method. Don't try to jump the gun. Be patient. Market is always a zigzag. Niche aayega. It will give you a chance. And if you really want to be aggressive, then become aggressive when it has fallen 30%. When it has fallen 50%, then show aggressiveness. That's the time to be aggressive.